Meine sehr verehrten Damen und Herren, dear ladies and gentlemen, I'm very, very pleased to wish you all a very warm welcome here again at the Swiss Institute of International Studies at Zurich University. Herzlich willkommen einmal mehr beim Schweizerischen Institut für Auslandforschung an der Universität Zürich. Dies ist der letzte Abend unseres Herbstzyklus an der Universität nach Vorträgen von Ahmad Mansour, Lea Ippi, General Ben Hodges und Christoph Heusgen begrüßen wir heute Abend und jetzt Mary Ellen Iskenderian, CEO of Women's World Banking. Dear Mary Ellen, it is an absolutely great honor to have you here with us. We couldn't wait to make this appointment. Thank you very much for spending our time with us, ladies and gentlemen. Please give Mary Ellen a huge hand. It's almost finished, but maybe 2 more minutes to give you the full credit for your enormous personality. Ladies and gentlemen, tonight's topic is indeed extremely important. There is nothing micro about 1 billion women making finance work for women. And this is not only the title of our lecture of tonight, but also of Mary Ellen Iskenderian's best-selling book, published by the MIT Press. If you don't have it yet, buy it immediately. It will change your life. Fact is, nearly 1 billion women have been completely excluded from the formal financial system, without even a bank account in their own names. They lack the basics service that most of us take for granted. Secure ways to save money, pay bills, get credit, etc., etc. Not to speak of a self-determined life in freedom and dignity. How can we overcome this exclusion and integrate these women in the economic lifeline? And how can the worldwide banking industries become motivated to see these 1 billion unbanked women not as charity cases, but as a business opportunity with new markets for financial inclusion? Mary Ellen Iskenderian is President and CEO of Women's World Banking, a global non-profit devoted to giving more low-income women access to financial tools and resources they need for both, for security and for prosperity. In other words, it is time to change mindsets, overcome prejudices, and get ready not only to know about the necessity of change, but also bring it into reality. Dear Mary Ellen, we can't wait. The floor is yours. Thank you.
I'm sorry I was in such a hurry. Thank you. Good evening, everyone. It is just a great honor to be with you. Thank you for that generous introduction, Dr. Meyer. Over the past 45 years, Women's World Banking has improved the lives of literally hundreds of millions of low-income women by including them in the formal financial system. And this has had profound impacts on the women themselves, as well as their families, their communities, and even on the global economy. I'm deeply honored to be a part of SIAF's prestigious lecture series and for this opportunity to share my thoughts on the power of ensuring that women have equal access to, and even more importantly, control over financial resources. For several years, I had wanted to write a book that would situate Women's World Banking's work within the broader body of knowledge and research about financial inclusion and women's economic empowerment in general. But I never seemed to be able to make the sustained time commitment that a book requires. That is, until COVID-19 lockdown gave us all a lot more time at home than we had ever imagined possible. So I was delighted that MIT Press agreed to publish the resulting book, but they made it very clear to me that they didn't want the book to be about my experiences, but rather about the women that I've had the privilege to meet over the years, and the stories those women have shared with me about the ways in which gaining control over their financial lives has transformed all other aspects of their lives. So let's start with one of those stories. Oh, that's my story. Hiyam Abu Shakir is a client of Microfund for Women, which is a leading microfinance institution in Jordan. And I should note for the academics in the room that I fully recognize the limits of telling one woman's story to extrapolate more generalized results. But that said, I want to emphasize that Hiyam's story and the others that I tell in my book all reflect experiences that women around the world have shared with me and my colleagues at Women's World Banking time and time again. So Hiyam was actually Lebanese, and her family sent her to Jordan during the Lebanese Civil War to earn money to send home. And she told me when I met her about being very lonely and that it took her a long time to make friends. And so she was very, very proud that she and her husband, Hassan, are now very well known and well respected in their neighborhood, along with their 3 sons in Amman. She wanted a little money of her own a few years after she and Hassan were married. And so since he was a butcher, it made sense for her to start a business selling cold cuts and sausages on the side. The popularity of her products grew, and so she heard about Microfund for Women through word of mouth, and she borrowed a microloan from them to buy a meat grinder that would allow her to double her production capacity. The business went on, her popularity continued to grow, but then disaster struck, and Hassan had a heart attack. He was treated at the military hospital in Amman, but all of his other medical expenses, as well as a special diet and nursing care, all of that was out-of-pocket expenses for the family. So if you add that to the time away from her business, all of the family's savings and Hiyam's pocket money were completely depleted. And then the next blow fell as Hassan was discharged from the hospital. The doctor said he couldn't work any longer. And so overnight, the source of Hiyam's money on the side had become the family's only source of income. So I think Hiyam's story up to this point, and we'll leave her in relief there, is a good place to pause for a moment and talk about what financial inclusion really is and maybe a little bit about what it's not. So today, 1.4 billion people, fully a quarter of the world's population, lack a bank or a mobile money account in their own name, and more than half of those are women. And despite lots of advances in things like mobile phone ownership and personal identification that are all critical steps in the process of inclusion, it's been men that have disproportionately benefited from those gains. But there's also a gap in how we talk about financial inclusion and how it's measured. Typically, ownership of an account is what the typical definition of financial inclusion, but what it really means to be truly included in the formal financial system and the economy includes things like having a convenient and affordable way to make payments and send money. It means having a safe place to save. It means being able to borrow for large purchases or to take advantage of commercial opportunities. And it means insurance products to manage risk and protect against losing all that you've built. But I think we should push a little bit further the parameters of financial inclusion and say that it's not just about gaining access to those things, but also about the knowledge and the confidence to use them in an appropriate way with appropriate technology. And it's also about being treated with dignity, not in a predatory way, by being charged excessive fees or usurious interest rates. But why does financial inclusion matter so much? Oh, I'm using the wrong thing. At the macro level, excluding people from the financial system is a drag on that entire system. Financial inclusion is a driver not just of growth, but of inclusive growth. I'd like to call on two really important pieces of IMF research here. The first is that gender inequality in a country correlates directly with the level of overall inequality in that economy. In addition, the benefits of inclusive growth only can be realized when the most excluded members of the society are brought into the economy. Women in every region, every age group, every demographic category are the most excluded people in the world. We simply cannot talk about financial inclusion, inclusive growth, or addressing economic inequality without looking at the ways in which women are systematically denied access to and control of the levers of economic progress, most notably the financial tools. And the foolhardiness, really, of economically sidelining half of the world's population is more evident now than ever before as we stagger from the post-pandemic economic crisis to the post-invasion crisis. The IMF has made consistent downward revisions to their economic growth projections for both 2023 and 2024, from 4.9% this time last year to 3% earlier this month for both this year and next. I understand that a complex set of factors have contributed to this slowdown, but closing the gender gap in financial inclusion could compensate for that entire shortfall, plus some. Financial inclusion also matters at the micro level. It's not an end in itself. Financial inclusion is really a means to an end, a means for individual people to make change happen in their own lives. And we've seen powerful outcomes when women have access and use of financial services, particularly digital financial services. Throughout my book, I introduce you to several women, and just a few of them are pictured here, whose lives were transformed by gaining access to financial services. At Women's World Banking, we were very fortunate to work with an economist named Martha Chen at Harvard. She had developed a framework during the 1990s to look at the way that microfinance empowered women, and she was willing to work with us to expand that more broadly to financial inclusion. So in addition to material change, the most obvious changes in a household with more assets, more income, everyone in the household living a little bit better, more money coming in, we can measure cognitive changes as well as women gain additional knowledge, skills, and awareness as a result of being financially included. When a woman has more control over financial tools and resources to manage those resources, she also gains a greater say in household decision making. And her decisions, I'm afraid, gentlemen, in contrast to men's decisions, tend to benefit more members of the family because women are more typically focused on spending on education, healthcare, and housing. And in some cases, once women have been financially included, they are more likely to vote or even to run for public office, and they gain greater self-confidence and are more motivated to plan for the future. But what I don't understand, all of that's quite clear to me, is why women's financial inclusion doesn't matter more to financial service providers, because they are arguably the ones with the most to gain if more people were more financially included. In fact, Oliver Wyman has identified a $700 billion annual revenue opportunity for banks and other financial service providers if they do nothing more than provide financial services to women and men at the same rate. To put that number a little bit into context, Elon Musk's net worth, at least this week, is $241 billion. So let me repeat that. That's $700 billion that's being left on the table. So why are un- and underbanked women seen, as Dr. Meyer said, as charity cases rather than as 1 billion people who aren't your customers? Over the years I've worked at Women's World Banking, I've gained some insight into why that might be and what we can do to change it. A few years ago, a bank in Paraguay asked Women's World Banking to help them expand their rural lending portfolio. As part of our market research, the Women's World Banking team and some of the bank's credit officers visited a few of their existing clients, including a soybean farmer named Manuel. As we toured the farm, we noticed a small vegetable garden, some cows, and some hens in a corner of the property. And when we asked Manuel about them, he pointed to his wife, Maria, who hadn't really said much up to that point, and he just shrugged, well, that's her business. Later, we went into the house, and Maria served us all a cool drink as we discussed the family business. And it slowly emerged that Maria sold eggs, vegetables, cheese, salsa at a local market every week. And she told us she could sell more. She never came home with a single egg left. And since Manuel only had money coming into the household twice a year from the soybean harvest, Maria's earnings made up the vast majority of the household's income, 70% of household income, for over 10 months of the year. So this was the moment when all of the bankers around the table kind of perked up because they realized that Manuel had been making timely payments on his loan all these years, but it had really been Maria's cash flow from her weekly sales that had been paying their loans. This was the business that had been invisible to them, a business that, like so many women's enterprises, are hiding in plain sight. So we worked with the bank to design a product which was an unsecured, what we called a sidecar loan, alongside Manuel's larger loan that matched Maria's cash flows from her weekly sales. And as we designed this loan product, we also worked with the bank to streamline their loan application process and all of the documentation requirements they had, which were not only really cumbersome, but women typically didn't really have access to a lot of the documents that the bank was asking for. And this is where we learned a second really important lesson about serving women clients. The simplified procedures were a huge hit with the men as well. Customer satisfaction scores for the men went through the roof. And we've seen time and time again that products that are designed with women's needs in mind work extremely well with men. Research and experience shows that the opposite, which would be products designed for men and most likely by men, haven't worked so well for women. And it's good business. Within 2 years of introducing this new product and all of these process changes, the bank's rural loans had increased to 45% of the total loan portfolio, well in excess of their original target, and they had started at 14%. And women represented 40% of those rural clients. But this story always stayed with me for another reason. We went back 6 months later to see how Maria was faring and how the sidecar loan was working in real life. We got to the door. She looked us straight in the eye. She proudly showed off her new cow and the chickens and her much larger garden. But when we asked her, what was the thing she was most proud of? She said that it was the fact that she was now seen and respected by Manuel, her husband. The biggest change in her life resulting from the bank loan had been the shift in how she had perceived herself as a result of this change and his change in attitude about her. In a sense, Maria had not only been invisible to those bankers and to her husband, but even to herself. And when women are invisible, they are unable to live the lives they were meant to live to the fullest. And we, all of us, are poorer for that. Their economic disempowerment extends beyond their financial lives and shows up as an important factor in things ranging as far apart as child marriage, gender-based violence, as well as the unequal distribution of care responsibilities. So women's economic empowerment has always been at the heart of Women's World Banking's work. And in fact, I like to think it's a real distinguishing feature of why we do what we do. Access to accounts, usage of the accounts really aren't enough. Merely counting the numbers of bank accounts that have been open really isn't enough. We needed to know how women's lives had been enriched and improved by access to finance. But since the book's publication, global events have really forced us to acknowledge that in addition to being empowered, women need to be resilient in the face of shocks. Shocks from war to natural and climate disasters, economic upheaval, we know now even global pandemics. And it's only women with access to financial services who will be equipped to deal with these shocks and to build their own resilience alongside that of their families and their communities. Having access to that full range of financial services we talked about before really takes on new meaning in the face of displaced people or to mitigate climate risks. Women need convenient, affordable, and ideally digital payments. A woman who's been displaced by a climate emergency or who's been left behind by her husband who has to move on because he can no longer farm his land needs to have a smartphone that she can send or receive payments on. She needs a safe place to save, to build a financial safety net as buffer against those shocks. She needs access to invest in growing and climate-proofing her business. They need to buy crop insurance in the event of drought, flood, or other natural disasters, but also health and life insurance, so that taking her daughters out of school isn't the first line of defense when the family faces a crisis. So certainly both men and women play vital roles in addressing the detrimental effects of climate change and environmental degradation. But it's women's livelihoods, especially in rural areas, that are disproportionately affected by climate change. Women are the traditional managers of water resources, food production, and livestock for the family. In fact, women and girls are responsible for 63% of the world's agriculture, leaving them highly dependent on environmental resources and very susceptible to climate upheaval. And while it is women who bear the biggest burden of the social and economic consequences of climate change, it's also women who bring a unique knowledge and understanding and specific experiences to solving these problems. It's critical to understand their points of view if we are to develop and implement the smartest solutions to address climate change and other global challenges. But here's the good news. There are roles for each and every one of us to play to make sure that women are financially empowered and that their voices are heard. So for those of you who are policymakers in the room, you really do need to lead the way. In fact, policymakers and regulators made an enormous difference in the lives of displaced Ukrainian women who had to flee their country after the Russian invasion. European regulators relaxed identification requirements, allowing women who were displaced to open bank accounts much more easily, so when they were able to be employed, their salaries could be deposited directly in those accounts. Financial policymakers must insist, this is really the number one thing. If we could accomplish this, so many other things would fall into place. They need to insist that the banks and other financial service providers that they regulate report gender disaggregated data. We need to push for universal digital identification. As more government and private services are brought online, even a paper identification won't be sufficient to be included any longer. Lack of collateral and the availability of credit information remain among the biggest barriers to finance for women-led businesses. And gender diversity in the regulatory and policymaking area is even worse than gender diversity in the banks that are being regulated. So we need to have more women in those roles as well. For financial service providers, and I know we have a lot of those in the room, open your eyes. Women's businesses are not invisible. They are all around you. Women-centered product design and marketing is key to unlocking what works for women. And as I mentioned before, what works for women typically works for everyone. Again, collect that gender disaggregated data, not just because a regulator is asking you to collect it, but to drive your business decisions. If you don't disaggregate that data, if you don't show who are your women clients, these valuable women customers will remain invisible to you. And then promote gender diverse teams. Again, because it is such good business, there's very substantial research now that shows it unlocks larger and more consistent profits in financial service providers. It's a greater source of innovation, and it's a greater outreach to women clients. If you want to reach more women clients, hire more women. And oh, by the way, women employees have a much higher retention rate than male employees. Another group that I have a feeling we've got a number of in this room, investors. Investing with a gender lens is a valuable, value-creating investment thesis. Women's World Banking has 2 gender lens investment funds, and the companies in our portfolios show a clear correlation between having more women clients and higher returns on equity, as well as lower non-performing loans. They also demonstrate, as I was saying, that serving more of these high-value female customers is made possible by hiring more women employees. And finally, for all of the rest of us, each and every one of us can be a more conscientious consumer of financial services. Insist on gender diversity in your financial service providers. Do we even know how many women are on the board of our insurance company or our bank? How many women loan officers are out there on the front lines making loans to women-owned companies? Insist on your children and your grandchildren having financial and digital literacy as early as possible. The research on financial literacy is really pretty bad. It doesn't, classroom research, classroom literacy classes don't really work all that well, but starting children at the age of 5 and maybe even a little bit earlier has a lifelong impact on their comfort with, confidence with financial tools. And then all of us can adopt that gender lens investment strategy that I mentioned. So in closing, I want to bring us back to Hiam, who started us off this evening. So once Hiam brought her husband, Hassan, home from the hospital, remember he wasn't able to work any longer, so she knew she really needed to grow her cold cuts business. She got back on her feet, she continued to grow the business, and so she took a second loan from Microfund for Women to expand her kitchen into a more commercial operation. Unfortunately, about a year later, her husband had a second heart attack and again required hospitalization. But this time, her second loan had been bundled with a microinsurance policy that allowed her to pay for his non-medical expenses without decimating her savings that she had been able to rebuild. And when she told me the story, her proudest achievement, like so many other women I've met around the world, was keeping all 3 of her boys in school throughout the entire ordeal that she and Hassan had gone through. So there it is, resilience, prosperity, empowerment. Financial inclusion is the key to making these women visible and to making sure that we can all be a part of putting the keys to financial inclusion in the hands of women around the world. Thank you so much for your attention.
Thank you very much, Mary Ellen. That was a wonderful conference, and you also expressed it in analytical terms and showed us the necessity that we should proceed with that much more than we already did or are somehow under the way. I have a question. How did you come to this topic at the beginning of your career as a CEO, maybe even before as a student, when you saw, okay, this is really something we have to solve and get into action with that? And what was probably also to overcome, to persuade the people in the first rounds to get to the point?
So this will be part of my I'll be carrying this bit of guilt with me for the rest of my life. I had a long career at the World Bank and the International Finance Corporation, which is the private sector arm of the bank. And I worked many years in the financial sector. And I never once asked a bank how many women clients they had. I never once asked an investment fund how many investments they'd made in women-led companies. I'm truly ashamed of this fact. Somehow, the board of Women's World Banking did take a chance on me. I had gained some experience in microfinance. I was a real believer in the opportunities that providing access to finance could have in the lives of entrepreneurs. But again, I wasn't thinking men versus women. I went out into the field in my first month at Women's World Banking, and you don't have to spend very much time to realize that it's women who are doing the hard work, the day-to-day work of economic development. And I've never been able to unsee that gender gap, that gender difference, and have become the converted.
Did you have a lot of competition among these topics, or were you more or less alone on the field when you started your business?
Well, I think I joined Women's World Banking in 2006, and that was the same year that Muhammad Yunus won the Nobel Peace Prize for the Grameen Bank and microfinance. So I think microfinance and financial inclusion was gaining in understanding, but I think it's not too much to say that Women's World Banking was really alone in promoting the importance of women's financial inclusion and how much more could be turbocharged, if you will, in an economy when women are included in it.
Right. Now you can say, of course, there are countries which are more accessible to these projects, and there are countries which are less accessible to these projects, like the Global South, or also countries in the Middle East where you have authoritarian systems, and the position of the women are a little bit doubted, and you have to persuade the people that this is important also for civil society. I think this is a lot of work to do and a lot of obstacles to overcome, isn't it?
Yes, cultural and social norms
exactly.
can be very, very, very stubborn. But I think one thing that was sort of exciting, if you will, or a bit of a silver lining coming out of the pandemic, is in that moment of crisis, we really saw the opportunity to break through some of those social norms. South Asia has a very, very significant gender gap in access to technology, particularly access to smartphones. Many families are very uncomfortable with their wives or young unmarried daughters having access to a cell phone. The Indian government made the first round of COVID relief payments payable only to women and only digitally through their cell phones. So within a matter of weeks of that first lockdown, you had 25 million new bank accounts opened, primarily by women on phones. And you may not, that was probably the most extreme case, but over the course of the pandemic, largely because of digital government payments and access to the cell phone, 242 million women were brought into the formal financial system. So I think we were able to really benefit from the crisis in pushing through some of those cultural and social norms.
You also have access to China.
We do. We have not done much work directly in China. They've been way ahead of the rest of us, though, on digital financial services, making digital available to a much broader array of their population.
But the big challenge will, of course, be Africa, isn't it?
Yeah, but we're all very, there's a lot of hope for Africa because they were way out ahead of us. The first really, viable digital financial product was M-Pesa, which was developed in Kenya and sort of has spread from there. So there's enormous opportunity. It's also a very young population, and we know that kids are born having an understanding of how to use digital technology. So we're very, very hopeful about working with youth in particular.
I mean, the best argument for this kind of system is that you can see the goods it does and the results which come with it, and this is extremely important. And is there sometimes a delay between establishing the banking system and then the people think, okay, now I can administer my money, but I have to invest it, I have to wait till the cow starts to get milk, etc., etc. How is that the transition from the banking system itself to the reality of trade or whatever it is?
Well, that's a very common form of saving, to save in livestock, or, in India you'll see women saving in gold bangles. Right. Again, that's a cultural norm that we work very hard to impress on women the value and the need of saving in the formal system.
Okay, I open the round to your questions, ladies and gentlemen. Please go ahead and seize the opportunity. Who would like to put a question? Yes, Christoph. We have a microphone.
You mentioned Thank you. You mentioned that products which were designed for women were particularly appreciated by men. Do you have an idea what are the reasons for that?
So I think some of the things that we see women really want in a product. They want convenience. They are very time-starved, so they want something very convenient. They want something that's safe and secure and they can trust. They want confidentiality. I can't tell you the number of times I've had women say, I would save in that account, but my husband knows about that account. So they want a level of confidentiality, and they want it to be affordable. Those are all things that men want as well. And so I think we've found if you focus on the things that are really important to women, that they will not take up that product if they don't see that it meets those needs. You're also meeting some very basic preferences of men as well.
Other questions, please? Yes?
Thank you. Thank you for your talk. When I saw the title of your talks, I thought, voila, that is most important, to say there is nothing micro about 1 million women. Now, when I listened, I heard a lot of micro credit to women, micro insurance policy, and still it's micro. I think, aren't we, or I ask you, aren't we beyond that micro credit, but now at least at meso credit or bigger credits to women, not just talking about the micro when in conclusion with women? Thank you.
Well, thank you very much. I deserved that with the title of my book. I think it's important, however, that one of the issues that makes digital financial services so exciting is that you can size a product to meet the need of a person who only has a certain amount of income coming in. I'd say the thing we hear most frequently from women when we talk, when we do a focus group, when we talk about a product, is, oh, the bank isn't for me. The bank is for a rich person. I don't have a lot of money to deposit. So I very much appreciate your attention to the language, but being able to do something small and the right size to make sure that people are comfortable with it is important. which is not to say that there are not a growing number of women who are running small and medium and even large businesses and should not be penalized with smaller loan sizes, something we often see. Financial service providers tend to write smaller loans to women than to men, despite having better repayment rates from those women. So I think the focus should be on the right size of the product, but sometimes that right size can be quite small.
Start small and get bigger,
Yeah.
and you have more success, of course. Next questions, please. Yes, Felix.
Thank you. Thank you for that excellent expose. On the downside, there are many areas of the world where people get into debt kind of problems because the providers are not as ethical as you are. What can be done that in these areas, these real problems of indebtedness of many people, particularly also women, are not going to increase and increase even further?
No, thank you very much for raising that, because I think there's been a much more intensive focus on the importance of consumer protection, and perhaps even more so now on data protection, data privacy issues, and consumer protection even than indebtedness. But I think more and more governments are asking the questions, how can we both benefit from financial inclusion and bringing more people into the formal system, but protect them from predatory practices, from over-indebtedness. So we're starting to see a real intention around consumer protection.
There is one question up there, or two questions.
Thank you. Marianne, one question. You mentioned how financial services should look like. Ideally, how much progress have you seen, and how do you actually measure the progress?
So there's a global database. The Findex database is maintained by the World Bank, funded by the Bill and Melinda Gates Foundation. After many, many, many years of seeing a 9% gender gap in financial inclusion, it just seemed impossible to break that 9% gap. This last time, the data was released in 2022, sort of end of the pandemic, we saw that gap come down to 6%. So there has been a very, explicit reduction. Now, we have to make sure that we pay very close attention to what that number means, because in some countries, you saw the gap close because men were closing accounts as well as women opening them, because they no longer saw the accounts as relevant to their lives, or that the products that were being offered were products that they needed. So, I think the real challenge facing all of us today, now that so many more people are in the system, is to keep them there, is to keep financial services relevant to them, relevant to their lives, relevant to their needs. But there is definitely progress being made.
Obviously, you focus on the developing world rather than the developed world. But do you see issues of financial inclusion for women in the developed world, in Europe, Switzerland?
Thank you again for asking that question. The country I know best is my home country in the United States. I think financial inclusion, defined as having a bank account, is something like 98%. In fact, more women have bank accounts than men in the US. But where we tend to look at this issue, both in the US and other developed countries, is around something called financial health. Would a household be able to gather together emergency funds on a very short-term basis if there was an illness? And that's where you start to really see the cracks, particularly in the United States, particularly because we have such a poor healthcare system there. That's a really big difference. The World Bank did a really interesting piece of research last year showing the sort of bottom 40% of the economies in Europe and in the United States. Those households were easily able to raise a $400 to $700 emergency expenditure. very difficult for households in the United States, even at that 40 percentile level, largely because of healthcare expenses. And then just one other quick thing, both in the US and in Europe, you see a real gap in wealth, women controlling far less of the wealth, home ownership, investment assets, savings accounts. That's really where you see the real financial inclusion gap, if you will, much of it driven by the wage gap. Women are consistently earning less throughout their careers, have less funds to invest, to put into productive assets.
Do you think you also need to educate the bankers to be more open-minded to give ladies loans?
Absolutely. Why do we have to educate them if it is such good business? That's the part that really...
but you have to prove that it is a good business. Yeah. This is the quintessential beginning.
Yeah.
Then, of course, Jacques de Bourgois. Here's a microphone, and then the lady up there.
Thank you. You work with a lot of financial institutions, banks and insurance. Can you give us a bit of an example of a typical partnership with a local bank or local insurance company?
Oh, it's a great question. So our model since our founding has been to work through a network of financial service providers. Today, we work with 63 banks, fintechs, microfinance institutions still, insurance companies, neobanks, payment companies, the range, in 32 countries, and they serve a total of 170 million customers. So one very common reason, or common partnership, is they learn from each other. And so when we do our annual satisfaction survey, the number one reason they stay with us, our members, is the ability to learn from each other, to learn from peers. In an advisory capacity, when we're inside an organization helping them design a product, we'll typically, I'd say there's kind of two kinds of assignments. Either they've identified a product they'd like to deliver, there's a target market they'd like to reach out to, and so they'll hire us to do market research, design a product that really is tailored to meet women. We are very big on pilots. We'll do a pilot of that. We'll take a look at how that works, how it doesn't work, and then go to roll out. One of the things that we're very proud of is we'll always do a customer lifetime value calculation on our products. I was just in Cambodia the week before last, and I was really delighted to see that a digital wallet that we had designed with a payments company that has since become a full-fledged bank that was taking salary deposits from garment workers. We had developed a savings product that could then also be the basis for lending to the women, as well as a few other products that they were going to make available on their wallet, had gone from 17% usage of the app to over 73% usage of the app. And the customer lifetime value of the product that we found when we got there was 18 cents, and it was $7.81 by the time we had implemented the product. So we're really about proving that business case that Dr. Meyer mentioned in the work that we do.
There was another question up there.
Thank you for your comments about financial inclusion. For those of us that work in philanthropy, we're always very aware of the role that women play in philanthropic contributions, and we know that as part of women's households, when they're the head of the household, they tend to give more of their income to charities and nonprofits, and when they have a part in the decision-making in their household with their husbands, they tend to give more of a percentage when women are involved in these decisions. So I'm wondering if you're, in your conversations with women, maybe even just anecdotally, if you also see women who have been financially included and have more control also tend to give more to charities and to contribute to the community in that way, in addition to driving the economy?
That's a great question. In all honesty, I can't say that I've seen that amongst the population that we're working with, which tend to be really, quite low income. But that the point you were making about more household decision-making power, that's quite clear. We see very clear evidence that once women are both earning and controlling how the money is disposed, we see them playing a much larger role in the way the money gets spent. We tend to see more girls being kept in school. We tend to see more expenditures on nutrition, better nutrition, on healthcare in general, for all of the members of the family, and for improved housing. So it stands to reason, although I can't say that I've seen that in our work.
Absolutely. Please. Michael Heingartner.
To what extent are you dependent on legacy banks as your partners, or would this be an opportunity for the new, virtual banks only, which might be more entrepreneurial, or do you need the trust that the brand that has been around the neighborhood for ages is required for these new customers to trust this step?
Right. It's a great question, because at the center of all of this really is trust. And as I mentioned before, it's actually not the large banks or legacy banks that have been around forever aren't necessarily a source of trust for the women we're working with, largely because they see such an emotional distance that these organizations aren't for us. We are doing, I'd say, fully a third of the organizations that we're working closely with in our network are fintechs. And in our second impact fund, the majority of our portfolio investments are fintechs. We see a lot of opportunity there in the fact that they have access to and are able to collect and use data that the legacy banks don't necessarily have access to. They're coming up with alternative credit scoring mechanisms that, again, the legacy banks haven't really figured out yet. So I think there's tremendous opportunity not only to work with fintechs that have a financial inclusion orientation, but partnerships between fintechs and legacy institutions.
Daniel Däniker.
The bitter truth is that substance abuse, squandering of assets, and domestic violence are more male than female issues. So the victim and the perpetrator are quite clear. Now, in the microfinance context, how do you protect women against men of this kind?
Oh, it's a very, very powerful question. And in my book, I talk about the fact that sort of the definitive piece of research, the piece of research that says women are better off or less well off by virtue of being financially included, and they are more or less vulnerable to domestic violence, hasn't been done. It has not been a source of research interest. And so I would really encourage any researchers in the room to take this on. But what does appear to be emerging is if a woman has access to a safe place to save and a confidential place to save, that allows her to leave when she has the money necessary. But there's still an awful lot of situations where women are more vulnerable when they have more assets under their control. So that definitive piece of work still really does need to be done.
In Switzerland, the problem is more or less solved. The wife is the bank, and the husband asks for the credit. Sometimes he gets it, sometimes not. More questions? Please.
Thank you, Marianne, for your talk. As the banks and the insurance companies seem to be reluctant to tap into this huge market of 1 billion women, how do you see the potential of mobile phone companies to go there where the banks and the insurance are too coward to go?
Okay, your word, not mine. The potential is enormous, and really what we've been working quite closely with many mobile network operators, with the GSMA, which is the industry association, because for them to really make money, they have to be operating at scale, the mobile network operators. And there's been a real clear delineation. The ones that have been able to offer the broadest range of financial products and services are getting to that scale much faster. So, you know, mobile has recognized that this is a tremendous opportunity for them.
Maybe a last question. Everybody happy? Yes, please.
A lot of the times, especially in low-income countries, on the credit side, there's also not a lot of money going around. There's also a liquidity issue. And this could be filled by organizations like development finance institutions. Mary, you mentioned you work for the IFC. There are plenty others, including Swiss ones. How could these organizations also be prodded more towards gender lens investing? There's initiatives like the 2X Challenge and thereabouts, but there doesn't seem to be a lot of liquidity going in or a lot of investments going in from DFIs into this space. What can be done to encourage them more?
That's a really great question as well. Well, I think all right, so I'm getting up on my soapbox a little bit because I do have an opinion on this. The vast majority of the way the DFIs, the development finance institutions, have worked with financial institutions locally is to do credit lines where they'll say, we'll make a $50 million credit line, 20 million of that has to go to women-owned companies. And they will lend $20 million, and then I have had bankers say to me, and I never made another loan to a woman-owned company. They don't really look at changing the fundamental structure of the organization, teaching the sales staff why this makes sense, working with credit officers to show them that you can write larger loans, they are better repairs, all of the data that we really have. My sense is that many of the DFIs, certainly not all of them, and I've been very impressed, it's not a DFI, but I've been very impressed, for example, with the work that the European Investment Bank has done to really incentivize local financial institutions to do more, to de-risk, or to take what the local financial institutions think is a risk in writing loans to women-led companies. So I don't mean to tar everybody with that brush, but I feel like so much of what we see coming out of the DFIs is about getting volume out the door and not really about changing the mentality for the financial service providers that they're working with.
There was another question up there.
Just a comment at the end of this lecture. I have served Women's World Banking 30 years again. And what I learned at this institution was, of course, also financial interests and whatever it is, the whole structure. And I'm very happy and very proud that Women's World Banking has become an institutional, very competent organization, financial organization. But what I learned there personally is something very important for my life afterwards as board member of quite a lot of companies and as a woman of economy, is that I saw that if people have access to financial support and to know-how, and if they are guided by an institution like Women's World Banking, they can make their own personal success. And that was something which was very important by treating whatever it was, problems in industry, in economy, in finance. And I'm very happy that our president and CEO is today in Zurich, one of the important financial places of the whole world.
Thank you.
Thank you, Rosemary.
That was wonderful. Thank you very much. So before we proceed to the presentation of our traditional gift, every speaker gets a gift, for better or for worse. I would have a look at what is coming. During the spring, we were already very busy and hopefully also successful. So we have Professor Ulrich Walzer, is a German physicist, engineer, and former astronaut, and he talks about artificial intelligence and the benefits and also, of course, the dangers which come closer and closer, as we all know. Then we have the head of the IMF, Kristalina Georgieva. We worked on her for a very long time. It was always complicated because we had COVID, and then she said yes, and then she had to cancel. But finally, we hope to realize this evening together with Thomas Jordan and myself, as we did a format already with Jerome Powell a couple of years ago, with a live stream, and the whole world listens to that, because even one comma of Jerome Powell was essential for the markets. And of course, then Sergio Ermotti, now again CEO of UBS and probably the most important banker in Europe, and Professor Susan Schröter. She is an ethnologist and talks about sometimes a little bit strange things which happen in Germany about certain fashions. I don't go into details right now, because we have till now a very uncontroversial evening, which is not always the case, but which also makes, of course, the salt in the soup at the SIAF. And then we have other formats like in Rüschlikon at the Swiss Life Center for Global Dialogue and at the Zurich Literaturhaus. So we hopefully prepare another interesting program for all of you, and of course you also have the live stream. But not to forget, analog presence is still something different, and we thank you immensely for this lecture and this very lively discussion, no question about that. It was a very good combination. And now we come to the final round. And, you know, we try to present a gift which somehow fits. So, for instance, I give you an example, or maybe I give you two examples. So we had once Chancellor Gerhard Schröder here, and Schröder once said, Putin is absolutely lupenreiner Democrat. So if you look through a magnifying glass, you see he's a total Democrat. Of course, it was not true, but I gave him a magnifying glass and said, if you look into the audience, you see here 500 Swiss lupenreiner Demokraten, and this is also a reward for you, and he took it as a joke. And then, of course, Lea Ypi, you might know her. She is also a fantastic speaker, and she is on the way to not exactly abolish capitalism, but I would say to mend it in her own way. So we gave her the game of Monopoly, but with the stations of streets and places of Zurich. So she can practice Monopoly with the background of the Zurich financial place. And now, what you said, Mary Ellen, was very interesting, and I made big ears, because you said already 5-year-old children should have an understanding of money, and of course also saving it, not just spending it for chocolates and Haribo and other unnecessary things, but also to build up an investment for whatever you do. You buy a Tesla share or whatever, very early. So what we found actually at an antiquarian shop is a how you call that, a piggy bank.
Oh.
A very interesting old piggy bank. It's difficult to find. I had one in my childhood. My father gave it to me. It is of solid steel. And you put the coins, your grandmother gives you therein, and then it's lost. And of course, your father has the key, and if he wants to pay a beer, he opens it, but you don't know that. So can we quickly see the photograph? Yes.
Oh, wow.
This reads Schweizerische Volksbank, does not exist anymore, Swiss Bank of the People. And this is this wonderful piggy bank. And I can tell you, if you show that around the world, it might be really also a charismatic item because it has a long history. It has also a key, so you can hide the key from burglars. And look at that. Isn't that beautiful?
It is.
I mean, huh? Thank you so much.
Thank you. What a wonderful gift. Thank you so much. This is really priceless.
Thank you, ladies and gentlemen.